Unconventional Wisdom, CSE Investment Show via podcast. And we have some guests on here today. We're going to get to in a little bit. We're missing Dirk, who's usually pretty quiet. His son's graduating kindergarten. And we're missing Cezanne. She had an appointment. So the rest of us are here. And you can call in when we finish with our guest. Our number. Whatever the number. There it is, 214-377-1108. 214-377-1108. You can also, while I do the process of this podcast, you can email at podcast, not at, just podcast at compoundstockearnings.com. Podcast at compoundstockearnings.com. And we will grab those emails and take care of what you want to. We have whoever does your techniques to explain what your question might be, or if you just got comments to make, that's good too. Nothing exciting really going on this week as far as any big announcements. We still have the downward pressure on commissions, and it's still going on. I had that in the Cal report a couple of weeks ago, and it's just more. Stress on the firms to lower their commissions. You go to our website, compoundstockearnings.com, and sign up for the Cal report. It's totally free. It's been published about 15 years, and you can sign up for it, and you'll get it. You'll get it every Friday afternoon, and it's got emails in there from all our clients asking questions, making comments, and then the answers that our people give, including myself. So it's a good thing. You can also sign up for Randy's Tuesday evening seminar. It's free, 7 to 9, 7 p.m. Central Time to 9 p.m. Central Time. And it's an introductory seminar, and you can ask questions. You can hear other people asking questions. And he's been doing that seminar for a long time. And he's always excited about it. Everybody, I get emails all the time. What a super job Randy does at these seminars. He's kind of calm, he's a little boring, but he's calm. He's calmly boring. If you've ever seen at our seminars that we do live, and we're going to be doing one 2-day covered call seminar in Dallas, where we've done it for years and years and years at City Place, and we'll be there. Randy's at the 28th, 27th, and 28th. What is the exact date of June?
I believe it's the 24th and 25th.
24th, 25th. Okay. And it'll also be online. So if you can't attend in person, it'll be online. And remember, whenever you sign up for our seminars, you can come back forever for free, in person or online. Same way with Joni and Cezanne's, same way with Keith, and the same way with Randy. So anything that you get, other than the monthly, for the toolbox, something like that's a small monthly charge. But seminars and other programs, once you pay for them, you got it. Okay, let's start with Joni. Joni, you had a pretty good week this week with your trade the moments. Why don't you tell people what you do and how quick those things close out?
Sure. We have a service, trade the moment service, where we're getting in and out of trades quickly. It's similar to Randy's service, except ours is a little bit quicker. We're not staying in long. We're looking at indicators for perfect entries and then hoping that momentum follows for profit. So this week I had a trade on Monday for 4.3%, and then today had a profitable trade for 4.1%. So for the week, 8.4%. So it's been a good week. A lot of movement in the market.
Yeah, and Cezanne had a good. I think she's had a good couple of trades since last Thursday also. So each of them trades, and so between the two of them, I guess maybe about 8% a week.
Yeah, I think she had one yesterday, right around the 4 to 5% trade. So almost every day we're trading. It depends on what we see happening in the charts. But most importantly, more than our trading, is that we're talking about these charting systems that CSE has, and looking at indicators, looking for entry spots, and then talking through what we're seeing going on in those.
And I think with attending those seminars, Monday, Wednesday, Thursday, right?
That's right. Monday and Wednesday are abbreviated webinar. We walk through the first trade of the day, and then Thursday is more instructional. So it's about an hour and a half every Thursday, it's more prolonged about what we're seeing going on.
We have a guest. Let's get our first guest, and we'll get to Randy and Keith. It's Gary, and I'm not sure exactly where he's from. Gary, are you there?
Yeah, hi.
Oh, I know where you're from now. You're from Boston, right?
Yeah, the accent's a giveaway, Joe. Come on.
There you go. We met the last time we were up in Boston several months ago, and it was a good seminar. Good to meet you up there. It's always a good crowd. You got all those guys coming in. We have some of the people coming in from Harvard and what is MIT up there?
Yeah.
Randy. We have a gentleman who always comes. He's been coming to those seminars in Boston forever, and I'm not sure what he teaches at MIT, but he's really delightful fellow. So how long have you been with us, Gary?
I met you a year ago in October.
Okay. So you're pretty new.
You came to Boston October of, I think, 15, and then you came back last year, October 16. I was there for both.
Oh, okay. And what techniques are you concentrating on?
Just covered calls. Basic.
Okay, that's Randy then. So you've got some experience listening to Randy.
Yeah. Randy makes the concepts come to life. He does a really fine job with that. And I was looking for something because my clients were involved with stocks, and I'm a life insurance guy by training. But there's a synergy there when you can take out policy loans and then use that money to write covered calls and generate a rate of return on both the covered calls and the life insurance. It's a beautiful synergy, and that's what got me into it. I got my Series 65, but all my clients were in the stocks, but they were just sitting there, and doing nothing, just waiting. Yeah, they weren't in the stocks, and so when I saw your technique, I knew that right away that was the answer for these people, and it was the biggest bang for the buck with the least amount of babysitting.
Yeah, there you go. Yeah, we have a technique. I don't think Randy concentrates on it, teaching it a lot, but it's a super technique where you take your clients, your insurance clients, take their stocks, and they haven't been doing anything with them. You just sell covered calls each week. Sell an out of the money covered call. No way in the world can they lose anything, but they're just going to make premium. So if the stock's yielding 3 or 4 or 5, 6% a year in dividends, they're still going to get their dividends, but they're going to boost that up to probably 70, 80% return if they just once a week sell a covered call and let it expire out of the money. If it goes out of the money and they get called out, well, they made a profit on the stock and they just buy back into it when it goes down. And they go up and down every day. So that's one technique that you could probably really help you out, because it's so safe. Randy, is that a true statement? Can you think of any way you could lose money on a situation like that when you're selling a weekly out of the money covered call?
Nope, not as long as the strike's above what you paid for the stock. And like you said, if it's called out, you wait till it comes down, buy it back again, or sell a put on it at that lower strike. It works out really good. That's a good little technique.
Yeah. So
What really impressed me about the technique was how insignificant each stock position is or can be. And if you get called out of this one, go get another one. I mean, unless your basis is almost nothing now, and you got them, they were legacy stocks. This stock this strategy trivializes that whole buy and hold thing. It just makes it absurd on the face of it.
Well, yeah, but you're absolutely right, because when you buy and hold, you're depending on one thing to create value there, and that's appreciation, speculation. Speculation is all you're doing. You're speculating, hoping it goes up in value. The stock's not the problem. The stock's the safe thing. It's the speculation is the thing that kills you. And
Hey.
so, but you got a good plan there. well, this new idea that should really help you increase your business. You know, people just hate to pay money for an insurance policy, you know, unless they know they're dying tomorrow or something like that. But this way they can see, hey, they're going to be able to borrow that, like you said, money back, so that's free. Okay, borrow their money back, and then find a decent stock, and then sell them covered call on a weekly basis, out of the money. No way, nothing can ever go bad. So.
Yeah, I like that. Sounds good. Yeah.
If you want more info, you might give me a call sometime or shoot me an email, and I'll give you specific examples. So you can maybe find out an example of some of the stocks that some of your clients have, and then I'd work up a little sheet for you showing exactly what would happen and how much it'd grow over the course of a year, what the return would be. I put those in the Cal report. The last probably 5 Cal reports, I've had an example of that, and it's really a good way to go. You know, and I think Randy touched on this too. Dogs in the Dow. This was no technique I learned in Merrill Lynch a long time ago, and where you take the 10 highest yielding stocks in the Dow, which means they're also the lowest price stocks. That's why they're the highest yielding. And the traditional method, you buy them and you hold them for a year, then you sell them. And they average typically going up 10%. In fact, Merrill guaranteed a 10% return. If it didn't get there naturally, they would substitute get it to 10%. And well, we do the same things. We pick out those stocks. They're always very good stocks. Are all in the Dow, you know. And we sell calls. We sell calls. It used to be on a monthly basis. Now you can do it on a weekly basis because we have buy those kind of stocks that had weekly expirations, and you make an incredible amount of money. And again, you got the best stocks, and you're really doing good. So, you know, put that in your head, and keep me posted if you want some specific examples. Like you have some clients that say, hey, yeah, we got Exxon, we got this, we got that. Well, just shoot me an email, and I'll work up those numbers for you and get them back to you and show them your clients. So
thanks, Joe. Yeah, you know, you mentioned this dogs of the Dow strategy. I can't believe I'd never heard of it before, but of course I've been on the debt side of the equation forever, the mortgage guy. That book. And then he had another book called Beating the Dow with Bonds. That was a little bit more intricate, not as easy to accomplish. But this dogs of the Dow thing, why isn't the whole world doing that? And use a strategy on top of it. That's
there are a lot of people do dogs of the Dow. Yeah. It's been around forever. I mean, it's been around. The technique's been around for 40, 50 years. And now it's so easy. You're doing your own trading. It was difficult back when you had to go sit in the broker's office, you know, and you had to go over to his desk, and it's kind of cumbersome to make it work. But I guess about the last 20 years, there's been sufficient good things that you don't have to sit with your broker. So, yeah.
Yeah, Joe, we teach that you call it the lead the dogs technique with the covered calls, and I teach that on our Thursday night coaching webinar, and so you can generate weekly income while you're getting that dividend every quarter.
You call it what do you call it?
Lead the dogs.
Well, lead the dogs. You wouldn't be more
because you're selling that out of the money. You're leading it forward out of the money call.
See what he could have like a little play dog, like with a rope. You know, beat the dogs. You know, YouTube sponsor.
Randy, is that call open to anybody, or is that your platinum group?
It's a monthly subscription coaching service every Thursday night for covered calls at 7 o'clock Eastern or Central Time, 7 o'clock Central Time, and those sessions are actually then recorded. So they're live, and everybody gets to ask questions, and I review their different positions. And then those are recorded, so you can watch them over and over again.
How much is that subscription?
It's $295 a month.
Okay, thank you.
Okay, well, Gary, we're going to let you go, and we have another gentleman on here, Skip, and I really appreciate you calling.
Take care. Bye-bye.
Hey, work on that accent. Yeah, work on that accent.
Work on the accent.
Okay, before we get to Skip, Randy, why don't you kind of bring people up to date what your schedule is and what you're doing? Anything new?
Well, we have, of course, you mentioned we have the Tuesday night free introductory webinar every Tuesday night, 7 o'clock Central Time. During that webinar, give a little bit of kind of teaching of what a cover call actually is, but then also actually demonstrate and select a new cover call position every Tuesday night using the compound stock earnings technique and the compound stock earnings search tools. So in addition, I teach another one of the techniques that we use. If the stock is going down, we can still generate weekly or monthly cash income even when the stock is going down. And I teach that technique during the webinar as well. So they actually get to learn how to do some stuff during that free webinar. So it's a great time, and they get to ask all their questions and get them all answered. So that's every Tuesday night, lasts about 2 hours. And then,
that's why.
Yep.
I started to say in relation to that somewhat, when you and I do the 2-day seminar, we always have people that have problem stocks, and so they bring them forth, and we show them how to use those techniques to continue monthly income based on their 4 or 5%, whatever they want to get, whether it's a weekly or monthly, and so we actually teach that in person to people. Take their real stocks. We've been doing that for years too. So that's good. So okay, well, let's
hey, I'm going to break in and see if Skip, are you on the line?
I'm here.
There you go.
Hey, Skip, this is Joe Hooper. Glad to hear you. How you doing?
Good morning, Joe. Thanks for having me on. That's awesome.
Where are you, Skip?
I'm in Virginia.
You're what?
I'm in Virginia.
Oh, Virginia. Okay. Okay. Well, good. How long have you been with us?
Let's see, 2009, so about 8 years now.
8 years. Well, I tell you what techniques? You must be doing pretty good. What techniques are you using?
Well, really, I've just been doing just the bedrock stuff. Just covered calls. I was in, with Randy's Platinum program for a while, and once I stumble my way into retirement, Joe, then I'll get into all the stuff. So
there you go. What kind of returns are you getting on the more traditional cover calls?
Well, very consistently, again, conservative, consistent, but that 2 to 3% a month without a problem.
Now, see, that's 24 to 36% a year. It's incredible stuff, incredible returns. And you just calmly like, oh yeah, it's okay. But,
no, I was jumping up and down the first couple of years. Now, like you said, now it's just kind of old hat. So
there you go. Well, you need to. He's got. Do you use this technique? What do you call it? It's not TTM. It's what's
momentum
the moment
trade?
Momentum trade. Have you done that, Skip?
No, I have not. No, I have not. Yeah, no. It's kind of fun. I didn't really, my working history has not allowed me to have one of these nice pension plans and things like that. So I'm trying to, get into something that can generate me some good returns and until I get to retirement. But it's kind of funny when I listen to Joni, talking about, the great returns that she does, and says, we're in it for 2-3 minutes, close your laptop and go away. And I don't think she realizes what a tease that is for me, because I can't wait to get there to have time to do that. So it's kind of funny.
I think, and that's true. But she's conservative. They're not in for 3 or 4 minutes. They're usually in for like 15 or 20 seconds. It's really.
Yeah, that's right. Yeah, that's right.
Back to rate.
I'm kind of really anxious to have the time to really spend a little bit more time and to take advantage of all the programs. I mean, I think that's going to end up being my retirement hobby that actually returns some money to me. So that's a pretty good deal.
Yeah. Well, if you go back to Randy's momentum trades, they're very much like, say, out in Joni's trade the moments, but they last longer. So you can do these because you don't get in and out within minutes. These things may last a week, may last 3 days, may last 12 hours, whatever. And so you could easily handle those. You ought to try one of his momentum trades sometimes, because you get it instantly.
Yeah,
on your screen. And
Yeah.
that's, we know.
Right. And I think I do want to get into that a little bit for sure. Yeah.
Yeah. And we never mention how you get these things, but, you know, Keith, Joni Cezanne, and Randy, when they get ready to do a deal, if you're on the seminar, you know it. You know that you're ready to do it. If you're not on the seminar, you're going to get it on your phone. If you're on the seminar, it's going to flash on your screen,
Right.
ready to do it. And while they're waiting to do it, and then so we just bought it. You know, and then we said we just got out of it. Or at least Joni and Cezanne said that.
Yeah.
Randy, you can go take a nap and wait a couple of days before his. But that's what I'm saying. That would give you significantly more return than that 3%, 2-3% a month that you're getting doing, you know, traditional covered calls. But that's good for covered calls. That's what we started with. And back then, the equipment that was available, the trading screens, the modems, all that stuff, that's really all you could do, you know. But now there's been so much improvements. Commissions
And
do more.
you're right, Joe. Too. That's why I like the podcast, because it, you know, getting away from the you know, the bedrock stuff, it does keep me updated on everything, and it just gets me more and more excited about getting some time to get into all the programs. It's really, it's really exciting for sure.
Yeah. Well, great. So how long before you think you're going to retire?
Maybe a couple more years.
Well,
Everything, if you know.
well, yeah. If you start doing those momentum trades, it'll be 3 weeks.
Yeah.
Okay. Well, thank you very much. Do you have any questions you want to ask Randy, or say something, Joni or Keith?
No, really. Just keep up the good work and keep the podcast interesting. That's been really fun watching for sure.
Well, good. I really appreciate your comments on that. So.
You bet.
Okay. Well, Skip, we'll drop off. Thank you very much for being on here. Bye.
You bet.
Okay. Keith.
Yes, sir.
Those big earphones, I swear, you look like it makes me feel like I'm on United. Come back.
Yeah. He's Captain Keith.
Captain Keith. Well, yours are much better, Randy. Yours just a little smaller. Because it is just so the big earphone, it looks like huge.
Yeah, it looked like the Princess Leia here, you know, the Star Wars, you know, the big muffin here.
What you're up to, Keith?
Yeah, been doing the credit spread momentum trades. Closed one out last week for a modest gain and waiting to get in a new one. Again, these momentum trades, they want to have the market moving, and the market has been pretty flat recently here in the last week. So been waiting for the charts to indicate another place to open, and we're continuing to monitor that. Also trading the iron condors once a week, looking for those. Last week, the premiums were anemic on that, and so we didn't get in one there, and they look like they're probably marginal today. So I always look after the podcast for entering those for next week's expiration. I like to be out of those either this afternoon or tomorrow, though. Even though it's next week's expiration, I rarely let them go to expiration. I just try to close them out for somewhere between a 2 and a 4 or 5% gain. Recently, we had a 3% gain one, and another one was a 8% gain. So those were the 8% was sort of abnormal, but take advantage of the tick not moving much during the week and went to go to expiration. So again, I've been doing a lot better on being a little bit more discriminating as to when I get into a trade. So I may not do these every week, but boy, my losses have certainly been down a whole lot less just by not wanting to get into a trade just to get into a trade too. So like to have the probability on our side based on the charts, on mostly the CSE charts that we have, the advanced chart and the CSM charting tools, and pick the place to enter, and then try to be out in a few days.
One thing about it, I think we talked about this last weekend. The last 6 or 7 months, your returns, what are they total on the one product?
The ones I think about 50%, and the other one's about one's about 35%, and the other one's 24% now. So it's up around 60% a little over 60% so far for the year in April. I mean, early on.
That's just this year. That's right.
That's just this year. Yeah.
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 Yeah. Fantastic. Fantastic. And Keith does seminars, and he will, teach you his techniques. And if you stay with us long enough, you can be diversified as to your techniques. You can be doing Create the Moments. You can be doing Randy's various things that he does. I think that there's what people don't seem to understand. We eliminate speculation here. We don't speculate. We don't buy anything hoping it's going to go up in value, because they all go up and down every day. Every day stocks go up and down. We make our money by selling those calls. And that call, when you sell that call, you now can manage that property, whether it goes up or down. You can produce that monthly income. If you're trying to retire, you need monthly income. And you're going to be able to get if you wanted to get 5% a month when you first bought the stock, and the stock goes down, when you attend our seminars, you learn how to keep making that 5%, even though that stock's going down in value. And you still run out there and sell it for a loss. We never sell anything for a loss. You're not going to get wealthy selling for a loss. You're not going to get wealthy speculating. In rare circumstances, you get wealthy speculating. So that's what we teach. The covered call gives you the control. So we're all about generating cash. $10,000 at 3% a month over 10 years is $3.5 million. And you see these projections by other outfits that say, you got to start saving when you're 25. You got to save and have a crummy car, crummy house, no life, never go out to eat. And 40 years, 45 years, you'll have $300,000, $400,000. Well, that won't even buy a meal 40 years from now. So maybe some at McDonald's. But so we're all about income. That's what we do. We produce income. Okay. Does anybody have any comments they want to make? Well, otherwise, call it in here.
Just let them know. Just go to www.compoundstockearnings.com, and that's where you can sign up for the free Tuesday webinar and just take a look.
Okay, and if you want to call in next time, we'll write an email. We will. We didn't get to the emails this time because Dirk usually he's set up to get the emails during the podcast, and he's at some kind of graduation ceremony for his son. So we didn't read any of the emails still. We'll certainly address them. We'll also get the answers back to you. And then we'll talk about them on the next podcast next week. We're here every Thursday, 10 o'clock Central. I keep forgetting where I am in Puerto Rico. 11 o'clock Puerto Rico time, 10 o'clock Central time. So thanks you guys, and we'll talk to y'all later. Bye.
Okay. Have a great week, everybody.
Take care.